Speaking to Allison Nathan of Goldman Sachs, Ray Dalio said today that when the Fed shifted to a much easier stance, it made sense that both interest rates fell, which was good for bonds, and stock prices rose. But the power to do this is limited. Think of central banks cutting interest rates and purchasing financial assets as shooting doses of stimulants into their economies and markets. Dalio further stated that the financial world is now awash with liquidity chasing investments because of all the rate cuts and especially the quantitative easing that put $15 trillion into the hands of investors since the great financial crisis. The Fed and other central banks easing today will push more money and credit into financial assets, which will cause prices to rise, but future expected returns to decline. In other words, it's short-term bullish and long-term bearish because future expected returns will fall and central banks are running out of stimulants. In other words, party on, Wayne. Party on, Garth. At least for a little while. So, let's take a look at the charts. We're going to take a look at two charts today, beginning with the iShares Russell 2000 ETF, and the symbol is IWM. And this is the 20-year monthly chart. And as we've discussed before with regard to the Russell 2000, it's lagging the other major indices. So that's kind of why I wanted to focus on this one here first. And as you can see, we're at 156.11. That's a close on Friday. And it looks that from the top there, we've had this move down and sideways move. Perhaps that sideways move is more within these trend lines there, that channel there. We need to break above that top channel line. Looking down here at the MAC is trying the best it can to bottom and base in this period here, but it hasn't been able to do that yet. It's struggling. So it is giving an attempt, but I think it's not going to be a straight line. We're going to have some up days and down days and up weeks and down weeks, at least with the Russell. Moving on down here to the histogram, things are trying to improve, but very slowly. Into the price rate of change, again, the fast line wants to move above that slow line there, but it's not quite able to do that yet. It's getting reflected back. You might not be able to see that, just barely. We are slightly above zero, so there's just a little bit of power in it. But it wants to base in this area here. Hopefully, it can do the same that it did back in 2015, 2016. The relative strength index has climbed above the 50 or midline. It too looks like it wants to head on up. Now, the stochastics has shown us earlier that the fast line already climbed on board and it wants to run. So that's kind of why I'm thinking that the rest of the oscillators want to do the same thing. So that basing period is in their area. Volume looks fine. And then the Williams is also showing some good improvement. It's above that 50 or midline right here, and it wants to go higher. But I think it's going to be a little time before it's actually able to get moving, get some steam behind it, just simply is lagging the other indices. So now let's go take a look at the S&P 500. And now we're looking at the S&P 500 through the spiders. The SPY close on Friday is 300.65. Now, the S&P 500, as is the NASDAQ and the Dow, are all at all-time highs. Again, the Russell is struggling, and that's why I wanted to take a look at it first. But now let's take a look at the S&P. Again, heading on up. It's breached that previous level here, and we do have a pretty good trend line, at least on the top line, moving on up. We see here at the MAC. Now, the fast line here, at this level at 10 is fairly strong. So it reloaded here. The fast line has crossed through the slow line there. So I think we have some blue sky ahead of us. How much? Well, just judging by 2015, 2016, that basing period here. Once it climbed above the slow line, the fast line had about a year to a year and a half. So that's what I'm thinking. I'm thinking we have about a year, maybe a year and a half. And in the intro, Ray Dalio says we might have a year to 3 years. So I'm going to stick at, say, a year. Moving on down here into the histogram, you can see that we just popped above zero there. So things are looking up. Moving here to the price rate of change, that looks good. Relative strength as well, climbing, 63.74. Looks like it's going to head up even higher. Stochastics climbed on board some time ago. It's heading on up. The fast line is in the overbought territory. Slow line will follow shortly. Volume looks fine. And then the Williams also was an early indicator shooting on up into that overbought territory. And I think it's going to stay up there and do some sawtoothing. So for now, everything looks reasonable. We're heading on up. But again, that party may not last. So stay tuned to this channel and subscribe and hit that notification bell and you won't miss any videos that come out. So for today, that's ChewDog Charts. Thank you.